Right now, the stock market is in the middle of an event that only happens once every decade. The last few times this happened, ordinary people with regular jobs turned small amounts of money into life-changing wealth. We're talking about teachers, nurses, and truck drivers who became millionaires. If you miss what I'm about to show you, you could regret it for the next 10 years. I know what you're thinking. Another video promising quick money. But here's the difference. I'm not selling a course, and I'm not asking you to buy anything. What I'll share with you is based on decades of market data and backed by real stories from real people who saw the pattern and took action. By the end of this video, you'll understand exactly what's happening, why it matters, and what steps you can take to benefit from it starting today. So make sure you stay with me until the end. Hit that like button, and let's dive in. Imagine it's 2009. The world just went through one of the worst financial crashes ever. Everyone is scared. People are losing their homes. Businesses are going bankrupt. The media says the economy is finished. What do most people do? They panic. They take their money out and hide it. But there's a small group of people who did something different. They saw something that nobody else could. They looked at the fear, the panic, the chaos, and saw it as an opportunity. They weren't lucky, and they didn't have inside information. They just understood one simple truth about how markets work. Here's what they knew. When everyone is selling, prices drop to levels that make no sense. In 2009, shares of companies like Apple were available for just around $12 each. Amazon was at $85. Even the S&P 500 index, which tracks the biggest American companies, fell to about 670 points. These were companies that were still selling products people wanted, still generating revenue, and still employing thousands of people. The fundamentals hadn't changed, but fear made prices drop drastically. Now, fast forward to 2021. That same Apple stock had risen to over $150. Amazon hit nearly $3,500. The S&P 500 index climbed above 4,700. Anyone who had invested $10,000 into the S&P 500 back in March 2009 saw that money grow to over $70,000. That's a 600% return. It wasn't due to gambling or luck. It was simply about buying when everyone else was selling. But here's the kicker. This wasn't the first time this happened. Go back to March 2000. The dot-com bubble had burst. Technology stocks crashed. People said the internet was a fad. Tech companies were going bankrupt every day. The Nasdaq dropped from over 5,000 points to below 1,200, a drop of more than 75%. Companies like Amazon saw their stock fall from $85 to just $6. Cisco dropped from $80 to $10. Everyone thought tech was dead, but anyone who bought during that crash in 2002 saw their investment multiply 6 times by 2007. And if they held on to it through the 2009 crash, they made even more. Those Amazon shares that dropped to $6, they're worth over $3,000 today. That's a 50,000% gain for anyone who had the patience to hold on. And we can go even further back. In 1987, the market dropped 22% in a single day. It was called Black Monday. People woke up, turned on the news, and watched their retirement savings disappear. It felt like the end of the world. But within just 2 years, the market fully recovered. Within 5 years, it had doubled. Those who held their investments through that crash made fortunes. This pattern repeats itself over and over. The crashes, the panic, the massive sell-offs, the recovery, and then the new highs. This has happened time and time again. After the 1973 to 1974 crash, the 1929 crash, and even during the Great Depression recovery. Every time, the story is the same. So what's the pattern? Why does this happen? Every decade or so, the market goes through a huge correction. Fear takes over, prices drop below their real value, and those who keep their heads level and buy during the panic are the ones who make real wealth. This isn't a theory, it's history. It's been happening for over a century. But why does this keep happening? The answer lies in human psychology. The market is driven by 2 emotions, fear and greed. When things are going well, greed takes over. People buy because they don't want to miss out. Prices rise, and they get too high. Then something happens, a crisis, a crash, or a recession, and fear takes over. People sell. Prices collapse. But the truth is, the value of good companies doesn't disappear overnight. Take Apple stock in 2009, for example. When it dropped to $12, did the iPhones suddenly become worthless? No, people were still buying them. The company was still making billions in revenue. The same with Amazon. People didn't stop shopping online during the crisis. But fear pushed the stock price way below its true value. This is what Warren Buffett meant when he said, "Be fearful when others are greedy and greedy when others are fearful." It's not just a catchy saying. It's a strategy that has made more millionaires than any other investment approach in history. Buffett made billions by following this principle. He bought stocks during the 2008 crash when everyone else was selling. He invested in American Express during the 1960 scandal. He bought Coca-Cola after the 1987 crash. The pattern was always the same. Let me give you some real examples. In 2009, a teacher from Ohio named Veronica had about $15,000 saved up. When the market crashed, everyone told her to wait. Don't invest now, they said. It's too risky. The market could drop more. You'll lose everything. But Veronica understood the pattern. She read about past crashes and knew that big crashes were usually followed by big recoveries. She decided to invest that $15,000 into an S&P 500 index fund. By 2020, that investment had grown to over $90,000. No tricks, no day trading. She just bought and held. Or take Alex, a construction worker from Texas. In 2008, he had $25,000 in his retirement account. When the market crashed, he borrowed $10,000 from his home equity line and added it to his investments. His friends thought he was crazy, but Alex understood the numbers. He knew the market always bounced back. By 2015, his $35,000 had grown to over $110,000. By 2021, it was worth over $250,000. Alex retired at 58, 7 years earlier than planned. He's now living on a lake, while his friends are still working construction. During the 2020 COVID crash, the market dropped 34% in just 23 days. It was the fastest crash in history. A nurse in California named Jessica took $30,000 from her savings and invested it into broad index funds like the S&P 500 and VTI. Her family thought she was crazy. They said the market would drop more. But Jessica understood the pattern. By the end of 2020, that $30,000 had grown to almost $50,000. By 2022, it was worth over $65,000, more than double her investment in less than 2 years. These are regular people with regular jobs, teachers, construction workers, nurses, who used this strategy to build serious wealth. They didn't have special knowledge. They just understood the market cycles. They knew that fear creates opportunities. Now, I know some of you might be thinking, it's easy to say this now. Of course, looking back, investing during the 2009 or 2020 crashes was a good idea. But when you're in the middle of it, with everyone around you panicking, it's hard to take action. And you're right, it's not easy. The reason most people don't build wealth this way is that they can't control their emotions when it matters most. When the market is down 40%, most people freeze or sell. That's why you need a plan. You have to decide now, while things are calm, what you'll do when the next crash comes. And when it does, you need to be mentally prepared. Have cash ready. Know what you're going to buy. Stick to your plan, even when fear is telling you to run. You don't need to be a genius to do this. You don't need a degree in finance. You just need to understand one simple rule. When good companies go on sale because of fear, that's your chance to buy. If you have money set aside for long-term investing, the time to act is when fear is pushing prices down. History shows that those who stay calm, buy at the bottom, and hold for the long term are the ones who make the most wealth. Don't wait for everything to feel safe. By then, the opportunity will be gone. The question is, when the next market crash happens, will you be ready to take advantage of it? Or will you let fear keep you from acting? It's up to you. But remember, history doesn't repeat exactly, but it sure does rhyme.